Hey everyone, welcome back to Corporate Decoder, the place where we sift through corporate disclosures so you don't have to. And let me tell you, this latest filing from Coeptis Therapeutics Holdings Incorporated might just make you want to check your mailbox a little more often. So what is going on with Coeptis Therapeutics? Well, today we are diving into a very specific type of report, an 8K. Think of it as a company's way of sending an urgent telegram to the CSE and to all of us investors about something really important that just happened. And for Coeptis, that something is a notice from Nasdaq about a potential problem. The company received a letter from Nasdaq Capital Market, a big stock exchange that lists many companies. This letter is basically saying that Coeptis might be in hot water because they did not hold their annual shareholder meeting within the required 12 months after their fiscal year ended on the 31st of December 2024. This is a serious sniff from Nasdaq because it touches on something called continued listing rules. Basically, Nasdaq wants to make sure companies are run properly, and that includes having regular meetings where shareholders can have a say. Now, here is where it gets interesting. Coeptis isn't out of the woods yet. They have a deadline. They have to come up with a plan for Nasdaq within 45 days of receiving this notice, or by the 12th of January 2026, to show how they will fix this problem. If Nasdaq likes their plan, they could get up to 180 days from their fiscal year end to get compliant. That means they have until around the 29th of June 2026. Fortunately for Coeptis, they seem to have seen this coming. In their previous filings, they already mentioned that they are planning to hold their annual shareholder meeting on the 30th of January 2026. They believe this meeting will be enough to satisfy Nasdaq and get them back on track. So it looks like they are already taking steps to fix the issue, and hopefully this will be enough for Nasdaq. Let's take a quick look at what Coeptis actually does. They are a biopharmaceutical company focused on developing innovative therapies. Their common stock trades on the Nasdaq Capital Market under the ticker symbol COPE. They also have warrants trading under the ticker symbol COBUBBLE. These warrants give holders the right to buy shares of common stock at a certain price within a certain time frame. Now, an interesting point here is that Coeptis is classified as an emerging growth company. This classification comes with some benefits, like being able to delay adopting new or revised financial accounting standards. This can give smaller companies a bit more breathing room as they grow and try to meet all the regulatory requirements. So the main takeaway from this 8K filing is that Coeptis Therapeutics is facing a minor compliance issue with Nasdaq regarding their annual shareholder meeting. It is not a financial disaster, but it is a procedural bump in the road. The good news is that they seem to have a plan in place to address it. Looking at the bigger picture, the fact that they are facing this kind of issue perhaps suggests that the company's internal processes might need a closer look. While they are focused on developing serious medical treatments, basic corporate governance like holding shareholder meetings on time is crucial for investor confidence. Nasdaq's rules are there for a reason, to ensure transparency and accountability. However, Coeptis' proactive approach in scheduling the meeting before the deadline is a positive sign. It indicates that management is aware of the requirements and is working to meet them. The key for investors will be to watch if this planned meeting truly resolves the issue with Nasdaq, or if there are further complications down the line. The company's ability to maintain its listing on Nasdaq is vital for its liquidity and its ability to raise capital in the future. So, to sum it up, Coeptis Therapeutics Holdings Incorporated is navigating a small regulatory hurdle with Nasdaq about holding their shareholder meeting. They have a plan and a deadline to fix it, and it seems they are on track. Whether this signals any deeper issues within the company remains to be seen, but for now it is a situation to monitor closely. Alright, that is our quick decode of Coeptis Therapeutics' latest filing. What is your take on this Nasdaq notice and Coeptis' response? Do you think they will smoothly regain compliance, or are there hidden challenges? Let us know your thoughts in the comments below. If this breakdown was helpful, don't forget to hit that like button and subscribe for more corporate insights. And as always, you can join our community Discord linked in the description for more in-depth discussions. Thanks for watching, and we will see you in the next video.